To get a sense of their performance in the fourth quarter, CNBC TV 18's Rukmini began by asking him about the company's performance and what the road ahead looks like.
Yeah, I'm very happy looking at the way we have done. By the grace of God, things have worked out the way we wanted. And I'm very optimistic about the future.
Sure. Mr. Keshavan, want to understand from you in terms of your debt position currently, how is Narayana Health doing? What is the debt ratio that you're sitting at, and are you comfortable?
Yeah, I think based on the last 1 year equity infusions what we have done in the company, I think we are very comfortable at an EBITDA ratio, debt EBITDA ratio of 1:1.4. And currently we have a debt of around 257 crores, which is quite a healthy leverage what we are maintaining at the time. And this gives us a very good opportunity in terms of looking around for acquisitions, investing in future expansions at a much higher level.
Sure. Also, we have seen a bit of margin expansion happening this quarter. Do you see more room for margin improvement going ahead in FY17?
Yeah, see, as you have maintained in even our, at the time of listing, I think we have invested quite a bit in the last 3 years in our new units. And while we took a lot of OPEX hit in terms of the last 2-3 years, the time has come where these units have started contributing both in terms of occupancy, ramp-up, volumes and cash flows. So we are in a very, I would say, in a very comfortable position with respect to generation of cash flows from these units. And our focus for the next year would be in terms of ramp-up of these units, in terms of further improving the occupancy. And obviously, there is a room for further improvement of margins than what we have reported at the moment.
Sure. Also, if you can give us a sense of what is the occupancy rates that you have currently across your hospitals?
Currently, we have an occupancy of around 54%. And this is spread across our both mature and the new ones which we have set up in the last 2-3 years. And we expect, as I said earlier, FY17 is a focus for our new units to ramp up and deliver much more in terms of our revenue growth and EBITDA growth.
Sure. Dr. Shetty, I also want to understand from you in terms of your own expansion plans for FY17. What is it looking like? Are you looking to expand your footprint in other countries as well?
We have many plans. As you know, we are commissioning new hospitals. Our Bombay hospital should be ready hopefully by end of this year, and few other hospitals. And we have signed an agreement. We are in the process of building a hospital in Kenya, and we are looking at, if possible, good. If the opportunities are good, some acquisition opportunities.
In fact, to be precise, we have 4 more hospitals which we have planned for the next 48 months. One is coming up in Mumbai in the next 6 to 7 months. The other one in Lucknow is expected to be in the next 24 months. And we have a Kenya where we have signed an agreement in the last few days. We expect that to come in the next 3 to 4 years. And of course, in Bhubaneswar, we are expecting a reply from the Bhubaneswar government in terms of allocating an alternate land for us.
Sure. Also, in terms of your capex, want to understand, are you going to be taking a big hit on capex again in the next year?
Not really. In fact, our 4 new projects, what I had mentioned, is sufficiently spaced out in terms of when they are going to come on board. So we also have a steady stream of cash flows which are coming in. I think there won't be any issue with respect to the cash flow of funding these projects. I think we are also adequately leveraged if in case we need much more money for capex.
Okay, that's the word coming in from Narayana